All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for January 19th, 2023. We'll start with the sniper trade of the day. This is in Brazil, EWZ, on the 3-minute chart. This was the previous day's close right here. This was the gap down opening, and then it ran all the way up to the peak of the 3-minute bar and then closed here, opened here, sold off a little bit, broke higher, which got us long with a standard risk box here. Checker hold. And then it immediately failed for a -1R. And given yesterday's weakness, I used that as a stop and reverse and just kept the same box. So now we've stopped in reverse. We're into this for -1. I'm especially interested if it can get below the low of the day. That would be a sign of a directional move to the downside. It immediately fails, which is good. Likes that. And so by this time, when you see this little consolidation phase that holds like right here, and then you see it breaks down below the low of the day and below that little consolidation, this is a really strong downward move right here. So if you were ever going to be very aggressive and you wanted to add it at 1R in hand, that would be a pretty good time to think about that on the initial break. For the conservative players like me, this is certainly, by the time you see that, you want to be getting your stop from here and at least to here, which is right above that consolidation zone there. And what that lets you do is if you got short here and now you moved your stop to here, you've taken all of your risk off the table and you've been able to lock in that wedge of gains, which we call no lose plus dinner for two, which now turns all of this into a science project to see how far it's going to go and what your exit rules will gain. And then that becomes just the report of the trade, which goes into your database of standard work as another line entry in the results of this particular pattern. And then from those statistics, you can compute things like average, standard deviation, expectancy, and so forth. And so we make our decisions about adjusting rules off of the analysis of standard work with a standard set of rules so that we can now compare individual cases. If you're changing the rules on every trade, then you can't do this kind of standard work analysis and come up with a analytical basis for making your changes. It's not the only way you can do it, but that's the way we do it. So now we're noticing after that little consolidation, you get that leg down. You get another consolidation. So you could think of this as leg one, and this is leg two. So it's not surprising then, with two sideways choppy moves in there, that you're starting to see the RL10, instead of being straight down, is now starting to curl a little bit. So this almost feel like the fail from here, that almost feels like a natural move. That's about 1.5 frog boxes, by the way, which we know because we're using standard MMRB, and then that's 3 of them. And so that feels approximately correct. So we're noticing this little rascal starting to stall a little bit. And so I stalk the exit the same way I stalk my entry. And now if my stop had been there for the no lose plus dinner for 2, you wouldn't be wrong to put that right at the 1 bar high, because this opened, ran all the way up, and is now starting to fail at that level. It hasn't broken to a new low yet. And so you might be justified in just locking that in, because one or of a couple things is going to happen. This thing is either going to fail right away and make a new low of the day in which you can further move your stop down, or it's not. It's just going to start monkeying around in here, and then you'll get some kind of sideways chop happening. And then if it doesn't fail, then the rebound is the natural response, and then that's going to connect with your declining PSAR. And so you end up thinking about, I'm probably going to end up exiting in that region. So why not, when you see this start to fail in that bar, just move your stop to a 1 bar low and just lock in all of that goodness, which when you compare it to the standard work is about 1.3. So just make a decision and stick to it. You might ask yourself, because you've done this standard analysis on your work, hey, what's my average trade for my winners? What's my average winner look like anyway? Let's suppose my average winner was 1.0. And if I can move to here and lock in 1.3, well, why not? I've just locked in an above average win. And then if I can compute my average win as 1, I don't want to let a trade that is already 1.3 in hand, or 1.5, and I could lock in 1.3. I don't ever want to let that trade turn an above average win into a below average win. So it's really important for you to know the statistics of your histogram. What is my average win? Don't let above average wins turn into below average wins. So that's a psychological resiliency standard practice. It is a professional response to many, many trades. You just say, I just have a rule. I'm not going to let above average win go below average. That in the long run will help you to raise the size of your average win, because it's not decaying and you're always incrementally getting better. And that turns out to be about where we get that exit. So we would also see that as a low. That's a higher low, so when it closes, that becomes bar 2 and bar 1. Now you got a higher low, and it took out the high of bar 2, so that makes this a 1, 2, 3 exit, and you end up giving back that much, which is about 0.7. So you gave back about 0.7 of your standard risk box. You'll also know that that is like right at the edge of the dragon. So when you have that, 3 legs down, if you will, and now the R10 started to reverse and starts to roll up, you're not wrong taking that right at the edge of the dragon, because the dragon acts as a noise buffer, your first line of defense against your last line of defense, which is the PSAR. So in this case, because you have an above average win and it has already started to reverse, this dragon, just take it at the edge of the noise buffer and you get a better exit than just waiting for the PSAR, which is your exit of last resort. So I like this exit here. Now notice this ran up and then came right back down. So price couldn't even penetrate the PSAR, and the R10 is still way down here. It opens and then starts selling off, and now we see this violation of the belly of the RL10. So what would we call that pattern on the short side there? What would we call that? Collapsing dragon. Yeah, so that's a re-entry, and with standard work would look something like that. Doesn't work, so I take about a 0.7. So end up cashing it here where the PSAR hits. Now I notice that the winter has stalled and has now become the spring. So now what we have is a harsh winter, notice the red, that peaked at the bottom, entered the dragon, crossed the spine, left the dragon, hit the PSAR. What would we call this entry with a standard risk box here? What would we call that entry? Supported spring crossing. That fails for a fractional loss. Now, this was not a very good exit. Like, as I critique myself here, I had 1, 2, 3, 4, 5, 6 bars where any exit has me in the money. Any exit anywhere in there makes money, but I let that thing come to here, and then here, and then exited there at the PSAR. That's just bad form. That's not good. It's about minus 0.2, but still could have done better. Now I'm noticing that the dragon has rolled over. The RL10 peaked here, crosses the dragon, hits the PSAR, and I decide not only to exit this trade, but to stop and reverse right here. So what would we call that pattern? Caught a 2 to the downside, right? Because now what I have is I had a high up here. I have a lower high where the RL10 peaked. It's not a collapsing dragon. I would have to wait for the belly of the RL10 and that PSAR. I would have to wait for that price action to happen to get a collapsing dragon. So what I'm really doing is I'm getting short. Prices crossed the dragon, hit the PSAR, but it has not yet hit the threshold for a collapsing dragon. So this little space in here, we call that the pocket. And that effort to get short on the K2 is justified by the size of this sell-off. And we're trying to front run. So by getting an entry here, we're not waiting to see confirmation of the failure. We think if it fails below this price level, that's going to go quick, fast, and in a hurry. And it's not unusual to see it hesitate in this space and not be decisive. But if it crosses this threshold, it's not unusual to see a big downward move. So rather than waiting for that and trying to chase it, given the preponderance of evidence on the short side, I'm willing to get short at that level with a COTA 2. And I've got the standard risk box here for standard work. Check or hold. If it breaks below the R10, then what I'm doing is moving my stop from here to lock in some kind of gain so that I could, that risk that I took in the pocket, I could lock that in, and hopefully prices flailing to the south. And now I'm locking in gains instead of trying to chase an entry and risking a bad fill. That's the advantage of the upside, if you will, of taking the COTA 2 entry in the pocket. Stats. So following along, So that kata 2 comes down, it penetrates. Now I want you to notice what happens when it violates that R10 belly and the PSAR flip. When it does breach, that responds with a move pretty quickly down to here, and then it doesn't fail any further and starts to recover. So once again, I want to take that just at the edge of the dragon and lock in this little gain instead of waiting for it to hit the more deliberate PSAR or letting it come through the dragon. This was the abnormal gain. It didn't go further. That's information to the contrary. So I'll just collect that little piece. Now, because this other kata 2 failed so quickly, and it never breaches the PSAR, and the R10 rolls over right away, I can't get long up in here because it never got there. The R10 is on the wrong side of the dragon. But what I can do is I can take, look how quickly that thing failed, and now there's my previous belly of the RL10. So what would we call this entry here? Collapsing dragon, because it is entering below. Now, notice once again the phenomenon of the price right after that collapsing dragon happens. That thing just drops like a rock, and now it opens, sells off, and comes back, sells off again. So this thing is already down to here, a full R in hand after just 3 bars, and most of that happened on the first bar. So the only way that I could have gotten a kata 2 entry in here was if somehow the pocket was only that big. If I'd been somehow able to get my short inside here, or maybe I pulled the trigger and that's where I got the fill. That could happen too. But I just want you to notice that it is not unusual that when the collapsing dragon threshold breaks, that you get that first harsh move. And that's why I like the kata 2 entry, because it's still just decaying slowly until the big move down happens when the collapsing dragon level breaks. So just a little piece of nuance there. Now, if my stop is here, and I see it's already down, I should by this time have my stop at least to like a 2-bar low. So if my entry was here, and this was the peak of that little doji, I'd like to be able to now take my risk off the table and lock in that little wedge of a gain. And now my psychology is satisfied. Check or hold. Now, I would advise that there was an opportunity to take that exit right here after this didn't fail further, and I already had about an R in hand. I think this is a better exit right at the edge of the dragon and just be done with it. That would have been fine. This, I held its hand a little bit longer. Like the RL10 hadn't bottomed out yet, but it did bottom out here. So now when it rolls up, I just take the PSAR, and I did not get as much out of this one as I might have. Right? So I only collect essentially the no-lose plus dinner for 2. I gave it 2 chances to fail, but it didn't. So now when it doesn't fail, now I'm ready to take this one as another SSC with a standard risk box. So my brother asks, could I put a range stead on and be ready at 85%? That's basically an average range intraday. If you know where that is, and really if you've got 4 to 5 MMRBs in a row from the top of the day, then you're going to be somewhere approaching an average intraday range. So that wouldn't surprise you to see it start to find support in that region. So this one is continuing. That's the harsh sell-off, bottoms out, crosses the dragon. Notice the dragon has started to roll up. So this is an SSC entry. If we had the RL30 on there, you'd probably notice that this would probably be an owl entry too. So we've got our standard risk box. And really, there's a couple price levels that'll be interesting. One is to see what happens when it gets to this peak, this intermediate peak of the RL10. That's going to be the first possible resistance. The second one is probably the peak of the dragon, and then the peak of the RL10. So those three price levels are of interest. Okay. So I would consider this space in here to that first one. That's just the tactical trade space. And if price does get through that, by that time I should be getting my stop up into here. If price gets past that, I want my stop up to here so that I could lock in my little wedge. Okay. That's how I treat that psychologically. So that would be, right by the numbers. It gets through there, has a little hesitation. My stop should be at least here. I wouldn't be offended if you were at the 2-bar low and you wanted to just be there and lock in a second little wedge. Because now you're talking about half an R. So I wouldn't be offended if you decided to lock in all of that. Now, I really want to see it get above this price level. And now I'm noticing that the RL10, it was in the spring phase from here to here, and now it's just turning into summer. So when I see that little thing happening, I got a higher low, and I got this almost feels like a little rising wedge. If it breaks above here, that could be really good. And now I could start looking at my 2R battle drill for adding positions. So that's about 1. That's about 2. So somewhere in this region, actually pretty close to the peak of the dragon, somewhere in here, I can think about a second position. And meanwhile, up until that point, what I want to do is just enjoy the fact that I've got a nice lock in here, and maybe I'm here. And if it can break through here, I'm going to put a second position up here, but I can at least start incrementing my stop so that I preserve the maximum amount of a 2R win as I'm stalking a second entry. Because this is the 2R battle drill on the preservation. If I've decided that my threshold to add a position is here, because that's about 2R. So I'm ready to add that second position here. And what I want to be in the position is as price is marching way up here, and it wouldn't be unusual to see it start to stall, I want to accelerate my stop loss so that when I'm putting the second position on, my stop on the first position is really close. So that if I get this position on and it fails, I'm all out and I've given back the very minimum on 2 positions, and I get to enjoy most of that gain. And if it does take off, then all I have to do is nudge it up a little bit to lock in the gains on the second entry, and then I'm really happy. So the 2R battle drill, if you're using that you're doing it for a couple reasons. You're preserving the gains of a near 2R win, and you're using it to get a second position on, and then at the same time being prepared to suffer minimum regret if it fails, and be able to respond with risk minimization. If it starts to work, you can jump your stop up, and that is a standard play that you must master in this style of trading. Okay? It doesn't really break through, does it? It doesn't get above that peak of the dragon. It tested once and failed, tested twice and failed. That was enough to make the R10 roll over, and I'm not really happy with that exit. I think I'd be happier with an exit somewhere on this boundary of the dragon. I think that those would be better, and that would be worth about an extra 0.2. On the other hand, since I haven't put the second position on, I could just learn to relax a little bit and trust the PSAR and just take the PSAR exit where it is and be ready to bank a little over 1 and just be content. So I can minimize my cognitive load by just saying, look, when that rolls over, either take it at the edge of the dragon or the PSAR. You decide 1, 2, or 3, and then live with it. You could take half at the dragon and the other half with the manager of the PSAR, and then you split the difference. No cognitive effort required. Now I want you to notice that the summertime, you had winter from here to here, spring, summer, and now fall is happening. So now if this fails here, now I can look for a target down to here. And if I had standard risk on this thing, I could probably justify a short position there. It doesn't look like it's failing. So now I can start thinking about this. And now if it breaches that declining PSAR and I get some kind of entry in here, if I get it north of the peak of the RL10, then that's an emerging dragon. If I get that entry somewhere around in here, it's a Kata 2. And again, the idea is I would be trying to front run the emerging dragon by getting an entry somewhere in this region with a fierce stop right there. So that's how we can stalk that. So we end up getting the Kata 2 entry, and then that rascal breaks out. Now this is another reason or another example of why that Kata 2 entry is not unreasonable. But notice how until it breaches that statistical level of the RL10, that this is just chopping around. But once it actually breaks above that level, that first move is massive. And so rather than waiting for this breakout to occur and then putting an order in and then figuring out where am I going to get my fill, I can just enter inside the upper edge of that noise region where the PSAR flipped. I can put my standard risk box on it. And I could also make a commitment now that says if it violated the belly of the RL10 and the PSAR, I'm really only going to risk half of that box because I want to be short on a collapsing dragon. So I'm already minimizing the risk in this strategy. Check or hold? So now we've got a Kata 2 entry. And if my 1R loss is here, but my execution stop would be there as I just described, on that first burst of a move up to here that closed here, would you be wrong in just picking half of that and saying, I want to lock in, I just want to lock in my little wedge right now? No, you wouldn't be wrong. When you see this happening, you've had 2 or 3 bars where it has not yet broken out, and it's just kind of gathering, and you can see the R10 starting to stall. Maybe you go to a 2-bar low and lock that in. An extra little wedge. Nothing wrong with that. Now this one was interesting. You know, you had a little bit of a pullback. The PSAR never flipped because the R10 never penetrated. And now here's your pocket. And here's the peak of your R10. And a breakout from there would be an emerging dragon. And that's probably close to a 2R battle drill. So somewhere around in here, I better have been thinking about getting a second position on, or I'm missing that opportunity. While I see it going into this little pocket, this little triangle of goodness here, my stop had better be at least here and maybe there at the belly of the RL10. And then as this breaks out, if I was ever going to put a second position on, I should have hit it there. Check or hold? Missed it. God dang it. So now we have a summer, fall, summer, and that quickly starts rolling over. So if this is that first leg up, second leg up, third leg up, and now it rolls over, and this little pinch of a wedge, I think this was still a few bars late. On my best day ever, I would probably get this one, or I should get that one. I think I waited too long on that. But we would take that. We can live with that B. That's a B minus exit. And now we're close to 3 p.m. And we just let the rest of the day unfold. So that even if you're just trading the one position, you know, with 1 unit of risk, that's about 1, 2, 3. That's about 4 scoops. And here's leg 1, pause. Leg 2, pause. Leg 3, pause. So that's like one big leg on a 10-minute. And just notice how the PSAR is your friend, just as a guide, and you can fine tune it. But look how nicely that thing, those PSAR flips, give you some really nice tradable trends. And now the dragon acting as your little noise barrier if you need it to fine tune. But there's something powerful in that relationship between that smooth price, which is the RL10, and the PSAR itself. So, sniper trade of the day in Brazil.